How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for December 15, 2017. Here's a quick snapshot of all the positions of the hedge funds and institutions and the banks. And so let's get into gold. What do we see with gold? So, gold has been extremely aggressive over the last many weeks, up until shortly where we had long exposure reaching highs of 82%. All right, and that came a couple weeks back around here. So highs of 82%. Now these were aggressive highs, 82%. So what happens when the institutions are around 80, 82, 83, 80, 45% exposed to in one direction? Well, there's not much room for them to add because they're already so overextended with their positions. So they will take profits. And when they take profits, they will close from 287,000 to 251,000 to 201,000 positions. So in essence, 86,000 long positions they closed, okay, causing price to drop. Now, what do they do at the same time with shorts? They added aggressively to their shorts to take advantage of the drop to the downside. Now, all they're doing is dropping price deeper within this non-2-to-1 monthly demand zone. All right, we have a really nice area of weekly demand down here nested within it. So price could even drop further down into this area here before we see a nice move to the upside. And net positions is positive 107,000. But right now, long exposure is sitting at 68%, which is very neutral right now. So I'm not looking to make any moves on gold right now. I'm not looking to open up any long positions. We do know just by looking at the position sizes that, you know, they are overall long biased. They just were overextended with their positions. So they've reduced their exposure by dropping and closing some of their longs, and they've also added shorts to ride the price downwards. So 68% of their overall exposure is geared to the long side. We could start seeing an accumulation of long positions from down here for a move to the upside. That is very possible. I'll be waiting on the sidelines until I start to see some strong demand come back into the market. And then when I see some nice positions setting themselves up, then I will be more inclined to get back into this market. Okay, let's take a look at oil. What do we see here? Oil is sitting at 761,000 positions long, all right, versus 146,000 positions short. Shorts are very cooled off at this point, and long exposure sits at 84%. Okay, very high, very overextended, and we're sitting within a weekly supply zone. So what's very possible to see happen is a drop in price from this weekly supply, even though that this weekly supply is poorly formed, because we're very, very overextended here with the long exposure. We could see some longs being closed out for profits, and then them getting back in more long lower down the charts. Okay, so with this 84% being so aggressive, I'm not looking to add long to oil just yet. All right, so let's take a look at the US dollar. What do we see here? We see that the US dollar has basically not made any moves. 24,000, 24,000, 32,000. So they closed off about 2,000 of their short positions as price was rallying up here. Okay, this big green candle. Price was rallying up, they closed about 2,000 of their short positions. So short exposure is sitting at 55%, which is bearish considering where we were just recently. But and actually there's room to move here. So even though 55% is considered bearish, there's still a lot more room, right? We can see numbers of 60s, 70s, and even 80% exposure. Right now we're only at 55% exposure. So there's definitely a lot of room for the institutions to add short and make and have price drop even further down. So we still haven't seen any signs of them adding those shorts, but they're not doing anything really with their longs right now. So right now I'm waiting on the sidelines to see what the institutions are going to do next. Aussie US dollar, they add more to their longs from 83,000 to 93,000, so about 10,000 positions long as price drops deeper into this monthly demand imbalance. So price drops deeper within the zone. They increase longs, but they also increase shorts. So they increase shorts as price drops, and they increase longs. Increasing the shorts could have been just to drop price lower so that they can get a better price on their long positions. Because what we do end up seeing is that they push price right back up into that tested weekly area of supply. Long exposure 64%, which means there is room to add. Okay, we've seen 80s before, and when price was at when the exposure was at the 80% range, we saw some profit taking, which caused the price to drop. Right now we're at 64%, a slight neutral bias, right? If you take a look at the cells, it's green, but a slight tinge of blue, which means just be a little bit careful to make some moves right now. All right, I'm waiting for this weekly area of supply to be removed. Once that's removed, long positions up like this will be golden. So 64% long exposure is very good, which means there's lots of room for the institutions to add long. So we're sitting at a good place right now. Just want that weekly area to be removed, and then I will be seriously interested in getting in some long. US CAD, what do we see here? They took some profits on longs, closing about 4,000 positions long as price rallied up into this weekly supply imbalance. And they also closed off about 4,000 of their shorts as price rallied up. So right now 75% of their overall exposure is geared to the short side. Net positions is a minus 41,000. So there's definitely a short bias right now. And 70%, last time positions were in the 70% range, we saw a move to the upside. So is that possible that we're going to see a move to the upside? I think it's very possible, considering if you look here on the monthly chart, a move to the upside like this looks like it's going to happen. So 75%, last time we were at 70%, we saw a move up. Now we're at 75%. Even though the bias is to the short side, because, you know, we got 75% exposure, right? Right here. Bias was short, 70%, but we moved up because they couldn't add any more short. So 75%, they can't add any more short, so they're going to start closing shorts. Well, we see a sign here from 67 to 66, 66 to 62, while they're just pretty much not doing anything with their longs. So we see some shorts being closed out, but we still haven't seen any aggressive longs. Why? Well, think about it. It makes complete sense. If you're trying to get out of a bunch of short positions, would you want to aggressively start buying? You know, what happens when you start aggressively buying? Price moves up. Do they want price to move up when they have a bunch of short positions that they want to close out? Not necessarily, right? They don't really want to do that. They want to keep price as low as possible so they can get out of their positions at a good price and not sacrifice by causing price to move upwards. So this makes sense. So it looks like they're just offloading shorts to eventually make a move to the upside. So not looking to make any trades on this pair just yet. US Swiss franc, what do we see? Longs still remain aggressive. They added about 2,000 to their shorts, becoming a little bit more aggressive. 71% of their overall exposure is geared to the long side. So we've seen highs of 86%. Right now, monthly supply is still in control, so I believe longer term we're going to see a move to the downside. Not looking to take any trades on this pair. Euro USD. So what do? They add 1,000 to their long positions, but they close off a big chunk of their shorts, reducing short positions from 112,000 to 92,000. That comes with this red candle. So price drops from a tested weekly supply zone and they close out short positions. Okay, so they were short, they added short, and then they closed short on the move downwards. Long exposure 69%. Last time exposure was at 65%. It was at these highs, and they took profits on their longs, causing price to drop. Is that going to happen again? It's possible. Or what we could be seeing right now is them offloading some of their shorts so that they can get better prices on their longs. Maybe a push lower down here into this weekly area of demand where last time price was. They added 19,000 long positions. So that's a possible move. A little bit lower down for then a bigger move to the upside. Very possible, but I'm waiting on the sidelines, not making any moves on this one yet because I want to see what it's going to end up doing. Pound US dollar, they close off some of their long positions from 89,000 to 82,000. That comes as price was consolidating up at these highs. Shorts, they also closed from 82,000 to 71,000 positions. 54% of their overall exposure is geared to the long side with a net positive position of 11,000. So, this is tricky because we're like in the middle of nowhere. There's really no good zones to take trades off of. So I'm waiting on this chart to see what will end up happening. I do believe that we're going to see a move to the upside. US dollar, Japanese yen, would we see? They reduced longs from 149,000 to 145,000. And they also reduced shorts from 34,000 to 31,000. And that comes as price reacted to the weekly area of supply. So we've since seen a move to the downside. 82% of their overall exposure is geared to the long side. Last time institutions were up in the 80% exposure to the long side, we saw profit taking and a move to the downside. So I'm expecting the same thing here, a move downwards, just like this. Okay, and Kiwi is last. What do we have here? A decrease from longs 24,000 to 23,000. That comes as price consolidated at the weekly tested demand zone, but shorts remain aggressive and don't really change. 61% of their overall exposure is geared to the short side. Last time 65% exposure to the short side. We saw a move to the upside. So I think that's just what has happened, right? A move to the upside here. We're now testing this area here. I believe we're going to end up seeing a move to the downside. Okay, very short-lived, I think. It's possible we can get a little bit more of a move to the upside, but we'll wait and see. Not taking any trades on this chart just yet. All right. So for this week on Wednesday, we have the Bank of Japan coming out with their interest rate decision. So that should get things to move a little bit more with the Japanese yen. And again, I believe we're going to end up seeing a move downwards as 82%. You know, they take profits on their longs when they're overexposed at these amounts. So that's what I think is going to happen, but we'll wait and see. This market has been making some good moves lately, but at this point I'm just waiting on the sidelines for things to be a little bit more clear before I put some of my hard-earned money into the market. All right, that's it for this report. Hope you guys trade well, and we'll see you next week.